market, and it is in that post kind of phase 3, so the latest stage pre-commercially drug can get to before the FDA stamps it with approval and lets it go on its way into the patient setting. Those specific stocks, because of this kind of burden of doubt of what the FDA is going to do, have retreated 30, 40, even 50% post their positive data. And we've never seen this type of group, like 10 to 15 companies, that have successfully embarked across, a potentially decade-long path to get to this point, be discounted so much on basically the effect that the FDA is going to function, that we're going to show the world that innovation not only matters, but it's going to reach patients. And that's an area where we feel as though we are listening to this administration, we are very tuned in and keyed into the companies that we're invested in as well, and understanding their kind of dialogue with the agency. And we feel like that is the singular best bet to be making in this market. Secondarily, pharmaceutical companies are going to be facing a very large issue around their patent cliff that's coming up over the next 5 to 10 years. We estimate it's about $400 billion of actual revenue that is going to go generic over that period of time. And the pharmaceutical complex made a decision about a decade ago that the innovation that they were looking for and the return on their capital was best found in acquiring assets in these small in the small biotech companies and bring them in-house after that innovation had really played out. And that M&A curve that we believe is going to really come back with a vengeance. Mind you, we're in a very heightened time of uncertainty. When that does come back, there is a very limited time that pharma is going to have to be able to replace those revenues. So we think that's the prime spot to hit those phase 2, phase 3 companies that have shown success in the clinic already.
You said there are about 15 names that are being discounted that are post phase 3, but before market.
Before market.
Can you give us a couple of these names?
Sure. There's a few. There's 2 segments that we really are focused on right now. One is in the rare disease category. Between the decisions and the commentary from both RFK, from Dr. Macri, who runs the FDA, and from Dr. Prasad, we're seeing that rare disease could be looked at quite differently. One of our favorites is a company called Scholar Rock. They're focused on a drug for SMA. It's a rare neurodegenerative disorder. Their drug passed through phase 3 trials successfully and is sitting at the FDA with a decision waiting to come in September. There are 2 oncology companies with exceptional data thus far. Mentioned before, Mirus Pharmaceuticals. They have a drug for head and neck cancer. We believe the best in class that's going to show additional data in a couple of weeks. And a company called Arcellx. They have a drug for multiple myeloma. We believe they are on just the cusp of getting to market in short order, and we think they have been discounted quite unfairly given the state of affairs at the FDA currently.
Michelle, thank you.
Absolutely. Thank you.
Michelle Ross. Up next, top technician Jonathan Krinsky tells us why he's worried about the momentum names right now. Closing bell, be right back. Welcome back. After a strong run in April, my next guest says market momentum could be stalling. Let's bring in BTIG's Jonathan Krinsky. Jonathan, what do you see in the charts that makes you think that?
Well, there's a couple things we're watching, Melissa. On the overall market, we've had a pretty good rally back up towards the 200-day moving average for a lot of the major indices. And there's definitely some overhead supply there. We're also watching the momentum names, the momentum factor. So May is actually typically the third best performing month for momentum. But there's a bifurcation on how it does in April and then the May performance. And to give you an example, when April is down for momentum, then May has actually been higher 10 of the last 11 years for an average of about 5% gain. So you actually want that weakness in April that sets up the May momentum. But when when April has been positive like it was this year, May performance for momentum is actually down 6 of 9 years for averaging more than a 1% decline. So April was positive for momentum this year, and so we think it's going to struggle a little bit in May, just kind of front loading those gains. And then the last reason is, we have this widely watched known unknown meeting this weekend between U.S. and China and trade talks. And when there's a widely anticipated event, whether it's a macro event, some sort of Fed meeting, et cetera, and the markets move in anticipation of that event, oftentimes you get a bit of a letdown on the other side. And we think that's the setup here. There's been a lot of positive trade talk headlines that's culminated with this rally off the lows, and we think that sets up for a bit of a buy the rumor, sell the news.
So when you say momentum, Jonathan, what specifically do you mean? I mean, is it Mag 7? Is it any name that's rallied hard from the recent April 21st low?
Yeah, it's a good question. I mean, typically when we talk about momentum, the momentum factor, it's names that have been outperforming the market over the last, call it 9 to 12 months. So these are, typically names that have strong price performance, over the last 12 months. And, front and center of that would be a name like Palantir, which, has been an outstanding performer. It actually pulled back pretty sharply into the April lows and then rallied nearly 90% off those lows right back into its prior highs, right into earnings. And you can see it's kind of faltering a bit. So, that's the type of name I think that presents a bit of risk here.
And then can I ask you something that's off the board right now, Jonathan, but I'm going to put it on the board, and that's Alphabet, which has really had a tough week this week. And I'm wondering what you see in the charts for this one.
Yeah, I mean, it's, it's like a lot of the Mag 7 names. It started to lose some relative strength. I would say, it's certainly not the strongest name in Mag 7, and there's some fundamental catalysts behind it. So, I think there's better names elsewhere, even within Mag 7.
All right. Jonathan, thank you. Jonathan Krinsky.
Thank you.
Up next, Bitcoin heading for another week of big gains. More in crypto in the climb after this quick break. Closing bell, be right back. 19 minutes until the closing bell rings. Bitcoin, meantime, continuing its climb higher. Tanea McKeel is here with more on that big move. Tanea.
Yeah, Melissa, thank you. The move really starting yesterday after Trump first teased the trade deal with the UK, but it's the greater uncertainty in the market that's been helping Bitcoin investors. They're starting to doubt the safe haven status of the U.S. They're seeking more neutral assets as they look for clarity on trade policy. So Bitcoin is still vulnerable to stock market volatility. It's not out of the woods until it reaches its all-time high of about $109,000, which it hit in January. Analysts I talked to say it could languish here for another couple of months. Bitcoin is heading, however, for its fourth up week in a row and first 4-week win streak since November. Risk sentiment also bleeding into other coins, which have really struggled to keep pace with Bitcoin this year. And I just want to mention Ether up again today to 28% over 2 days, heading for its best week since 2021, but still negative outflows in ETH ETFs, not seeing the kind of demand as Bitcoin ETFs are seeing, and the spot price is deep in the red for the year, down 30% compared to Bitcoin's roughly 10% gain for 2025.
You mentioned the risk-on sort of sentiment in the market, which has really taken hold since the end of April or so, helping Bitcoin's rise. It does seem, though, it's sort of also playing the role of digital gold. You mentioned the uncertainty, and as inflation fears pick up, you're seeing this. So it has like this win in all scenarios kind of.
Yeah, we're really seeing Bitcoin
right
kind of trying to prove what investors always said it could do. Like I said, vulnerable to the stock market volatility. So day to day and even week to week, you will see it kind of follow the stock market moves a little bit. You zoom out a little bit more and it does start to look a little bit more like that safe haven status. And then I think also what you've seen in the last couple of months is the demand for Bitcoin has changed since 2024 with the ETFs. A lot of the demand coming from ETFs, institutions, corporate holders like MicroStrategy, and all the little MicroStrategy copies we're seeing have really supported Bitcoin's price through the recent volatility. So it has been moving with stocks, but not the dramatic swings that you're used to seeing from Bitcoin over the last decade or so.
Right. Tanea, thank you. Tanea McKeel. Still ahead, Wilmington Trust's Megan Hsu standing by with the sector she is betting on right now. Closing bell, be right back.
Difference.com.
On June 5th, Fast Money will produce a live television event at the NASDAQ market site, and we invite you to be there. It is an opportunity to meet the traders, me in person, enjoy a networking cocktail mixer. Tickets are limited, so get yours right now. It makes a great Mother's Day gift, by the way. Scan the QR code on your screen with your phone or head on over to cnbcevents.com/fastmoney. Up next, we'll tell you what is driving Tesla stock higher today, that and much more when we take you inside the market zone. We are now in the closing bell market zone. Tesla on track for its third straight weekly gain. Phil LeBeau's got more on that, plus Christina Partsinevelos on two big movers in the chip space. And Wilmington Trust Megan Shu will join us to break down those crucial moments of the trading day. But Phil, we'll start with you on Tesla here. What's behind the move?
Well, take a look at what we are seeing for the first time in a long time, Melissa. Tesla today went above its 200-day moving average. And for many people, that is a sign, a bullish sign, that perhaps the best is yet to come. It's been on a roll, and it's been on a roll for at least a couple of weeks. Look at this. Third straight weekly gain. That's what we're headed for today. Shares trading above $300. And then you've got up 26% since the company reported its Q1 earnings results. Bottom line is this. The company may have been set back after the earnings call by people saying, are we really sure the robotaxi is going to come in June? Are we sure about a number of other things regarding Elon Musk and his leadership at the company? investors are clearly looking past that right now, Melissa, because this stock is on a roll. Again, going above $300 a share for a while today. Now just a tick underneath $300. Melissa, back to you.
You know, Phil, while we have you, I got to ask you about Newark Airport. I mean, almost on cue, the day after Transportation Secretary Sean Duffy outlines a plan that needs billions of dollars to fund to revamp the entire system, there's another issue.
Right. And you know what the problem is for the Department of Transportation and for the Port Authority of New York and New Jersey, which oversees the Newark Liberty Airport, and for the airlines that are there, most notably United Airlines, we may see other incidents like this in the days and weeks to come. There's no way of knowing. Hopefully we don't see any more incidents like what happened earlier this morning just before 4 a.m. where there was a brief outage, only impacted radar screens and communications for a couple of sectors relative to the air traffic control for Newark Liberty. But a couple of seconds, 90 seconds is what the estimated outage was. That's way too long any time of day. And if that continues, even though they're making changes, Melissa, this is going to be one of those issues that's really going to have people questioning if they want to fly into that airport.
All right, Phil, thank you. Phil LeBeau. Let's get to Christina. Christina, you've got details on microchip and Taiwan Semis moves higher. Big move on microchip.
Yeah, and then that's because management says their industry has hit, quote, a bottom, echoing similar comments from executives at Texas Instruments as well as STM just in recent weeks with their earnings report. Microchip, for those that don't know, makes chips for appliances, sensor connectivity, auto systems, and they're seeing improved ordering patterns as many customers really work through their chip stockpiles. Essentially, they're moving from an inventory correction phase to a restocking cycle. Evercore ISI thinks Microchip could potentially double its revenues within the next 12 to 24 months, while Citi expects the company to have, quote, the strongest bounce in fundamentals once the economy recovers. That's according to them. And so these are just encouraging signs for the stock and why you saw it jump. Also encouraging is TSMC on your screen, the world's largest chip manufacturer. Their April revenue jumped 48% year over year. That's the highest monthly sales figure on record. TSMC puts out their monthly earnings or monthly sales every single month, but they don't really break down what drove the surge. But it's reasonable to assume, what is it? AI hardware played a significant role since they had previously indicated they expect AI-related servers and processor revenue to double in 2025. And so that's helping shares, which, by the way, up over 24% just over the last year, 12 months, almost 1% higher today, though.
But there is a little asterisk next to that record sales figure, right? I mean, part of it is going to be pulled forward or expected to be pulled forward.
Precisely. You and I have talked about that quite a bit with a lot of these more cyclical names, or Intel warning about pull forward, AMD talking about demand pull forward being a little bit less obvious, and TSMC, they manufacture all of these chips, so there's no doubt there's going to be some portion of that coming forward because of tariff concerns over the next several months.
But they didn't say anything about that, did they?
No, they did not.
Yeah. All right. Christina, thanks. Christina Partsenevelis. Let's get now to Wilmington Trust's Megan Hsu, ahead of what could be a very big weekend in terms of trade talks with China. Megan, what are you expecting? Because most people aren't expecting much. And if that is the case, then maybe the markets are positioned exactly right now, which is basically flat on the day, but a nice run going in.
Yeah, thanks, Melissa. I think we're definitely in a place where the market has priced a lot of the progress that we've seen in the direction of trade talks, but now it comes down to sort of the magnitude, right? We know we are de-escalating. We have a trade deal in principle with the UK. We are engaging in talks with China over the weekend. But in terms of how much we are rolling back, those tariffs and just what the magnitude of those end numbers look like is really critical, because even if we are talking about a 10% tariff as being the floor, which it's seeming increasingly likely that that is the case, I think that makes it a close call for how the economy shakes out in the year ahead. And we are still pretty pessimistic if that's where we end up. So I think the market's recovered quite a bit because we're seeing progress towards more of a tact where we will be looking at ongoing trade deals, but those take time, and we're still looking at elevated uncertainty in the meantime.
when you hear about possibly the China tariff going down to, let's say, 80% was a number that Trump threw out, 60% is a number that the Wall Street Journal cited, according to people close to the situation, it's still very high, and it still might prevent trade from China from resuming. So when you're thinking about the backdrop for stocks going into the rest of the year, does a reduction to 80% move the needle on recession odds or no recession odds?
Not really. Well, I think there's 2 points, though. One is that as we're looking at how things have manifested over the past few weeks, what was perhaps most alarming about April 2nd and the tariff announcements was that it wasn't just against China. It was against all of our trading partners, leaving businesses really no place to go, no place to pivot their supply chains. I think many businesses came into this administration expecting to have to further pivot away from China. So seeing progress with other trading partners, and we just are getting headlines that maybe there's a list of 18 to 20 trading partners who are being fast-tracked or prioritized, that is constructive because it at least gives businesses a place to go. And as far as it relates to China, I think we need to see that tariff come down quite a bit more than just to 80%. That would still be pretty significant and pretty detrimental to existing businesses, especially if that is not phased in. I think it takes the effective tariff rate for the U.S. down just a couple of percent, still at multi-decade highs.
Yeah, which sectors, you're saying fully allocated to equities? I mean, there's no telling. They could announce a deal and there could be a rip to remember in the S&P 500. Which sectors are you allocated to? Is it more the growthy side of it, the lower valuations? How would you characterize it?
It's a balance. So we're trying to balance growth and value here. For value, looking for some maybe more attractive pricing in within the banks, within payment providers, and some of those sectors that typically represent value, but still having a slight overweight to technology, where you had a great segment just before. Yeah, certainly perhaps some pull forward of technology purchases from businesses, but still seeing really strong demand from AI and cloud computing, and expecting that to be the part of the market that sustainably leads us out of here. So I think it's about staying diversified, also not forgetting about international stocks, which have been more than pulling their weight this year for a change, which is nice for diversified investors.
Healthcare wasn't on that full screen, Megan. It's been a tough sector. There are a lot of headlines going against it these days. Where does it stand in your portfolio, if at all?
We do have a slight underweight to healthcare. We're trying to look at other areas for defensive positioning and just see it as too headline driven, a little bit too susceptible to both on the pharma side, successful drug trials, as well as a lot of potential news to come as we move beyond tariffs within the administration.
All right, Megan, thanks so much for joining us on this Friday. Megan Shear, Remington Trust. Closing bell rings here on this Friday ahead of very consequential trade talks in Switzerland this weekend. We'll be watching on Monday. That does it for us here on Closing Bell. Let's send it over to Overtime with Mike Santoli.
Thank you, Melissa. That is the end of regulation on a Friday. Intercontinental Exchange, the New York Stock Exchange's parent company, ringing the closing bell at the NYSE. Wagner College School of Nursing doing the honors at the NASDAQ. Major averages in wait-and-see mode for most of the day. The S&P 500 finishing right near the flat line on a one-day basis, and even for the week down about 0.5%. Key trade talks between the U.S. and China this weekend, though most sectors finishing the day in the green, just barely. That's the scorecard on Wall Street, but the action just getting started. Welcome to Closing Bell Overtime. I'm Mike Santoli. Morgan and John are off today. Coming up this hour, Tesla finishing up the week on a high note, closing out its third week of gains in a row as hope builds around the benefits of trade deals. Former Ford CEO Mark Fields will join us to discuss what's really driving that rally. Plus, a rare interview with Amazon's head of Prime Video, Mike Hopkins, as President Trump threatens tariffs this week on foreign-made films. Let's now get straight to the market action. Joining us now is CFRA Research Chief Investment Strategist Sam Stovall and Ariel Investments Vice Chairman Charlie Babrinsko. Guys, good to see you both. Thanks a lot for joining me here. Sam, it's an interesting spot the market finds itself in, a little bit of a crossroads, right? We had a near bear market or a severe correction. About a month ago, we start rallying. We kind of regained more than half of it. Now, some bear market rallies can be this strong, but maybe not all of them. So how are you thinking about the environment and what the market has told us this week?
Well, you brought up a good point, Mike. Good to see you again, first off. Basically, about 2 out of every 3 bear markets since World War II did have a very strong bear rally and actually got within 2% of the 200-day moving average, as we are right now. Some even went above the 200-day moving average, only to then turn around and set an even lower low. Even if we remain in correction mode, which is 10 to 20%, 42% of those times since World War II, we did end up with a similar reach to the top, only to then end up heading a little bit lower before all was said and done.
And so are you leaning in one direction or another based on, the weight of the evidence so far in the market, Sam?
Well, I bring this up simply because of the possibility that the market could turn around and head lower. But our Lowry research, which is our technical analysis arm, is indicating an increasing amount of demand relative to supply. And as a result, their belief, which goes along with my thoughts, that the market will continue to work its way higher.
And Charlie, I guess the one reason the market's been able to make up some of this ground, obviously there's some kind of hope for de-escalation on trade, but also the economy, as far as we can measure it, seems like it's steady for now. The Fed this week essentially said they don't see a particular emergency to respond to, either on the risk to growth or inflation right now. How are you reading it, and did this correction surface much opportunity for you?
Steady is an interesting adjective. I'd probably put wobbly. I'd say 1-year-old toddler trying to take his first steps. What we're hearing from our portfolio companies is a consumer that doesn't feel great, that's not real optimistic. The job market is okay, but outlook for the economy and inflation are not so great. And we, of course, did have 1 negative quarter of GDP growth. So I would say we have a market that's trading at above average multiples. Everything except for small cap value is above its 20-year average in terms of PE. And I would call the macro environment below average, higher than normal expectations of inflation. The Fed probably not going lower that we all thought they would 4 months ago. And the economy below average. So I think it's a modestly expensive market without a great outlook.
Okay, yeah, that would suggest not the greatest risk reward, given that really the S&P is only down 4% year to date, even with all the volatility. Charlie, Sam, stay with us for a minute. Let's just get to Eamon Javers now in Washington with the latest developments on trade today ahead of high-level talks this weekend with China. Eamon.
Hey there, Mike. We are waiting for hour-by-hour details of the schedule for the weekend with Treasury Secretary Scott Bessent in Switzerland for a meeting with the Chinese delegation. Obviously, a lot riding on that. The president said yesterday that these will be significant discussions. He says we're not going to just have a meeting to have a meeting. So we'll see what kind of breakthrough, if any, they're able to make over the weekend. But as we watch that trade negotiation for the details on China, a lot of people around the world are watching it also as a baseline for whatever else is happening, given that we saw this deal yesterday with the UK. Keep that 10% baseline figure in place for tariffs for the UK. The expectation here now is very much that 10% is sort of a universal baseline across the board. And White House Press Secretary Caroline Leavitt said as much in the press briefing today. Here's what she said.
The president is committed to the 10% baseline tariff, not just for the United Kingdom, but for his trade negotiations with all other countries as well.
So as much as the president said 80% sounds like a good number to him on social media earlier today in terms of tariffs with China, 10% seems to sound like a good number for him in terms of tariffs with the rest of the world. And the question is, how does that impact global trade? 10% seems to be a level where importers can still make money. The question is, with China, is 80% a number where they can still make money, or does the number have to come down from there really to allow significant trade between the United States and China? Mike?
Yeah, Eamon, thanks very much. Everything sounds like a pretty high level, Sam. At this point, I mean, if you're talking about the China tariffs, 145, everyone agrees, unsustainable. That's basically, an embargo. 80, I mean, I don't know if that sounds much better. What's your sense of what now is roughly priced into the market, aside from the general notion of the administration is looking for victories and deals here?
Well, I think that's what the market is anticipating. I think that it looked to the UK deal as being a leverage ahead of this coming weekend's Chinese talks. I also think that, as our Washington Analysis Political Strategy Group indicates, that the president is not likely to make broad sweeping agreements, but rather favor piecemeal deals in order to, as well as promises of further negotiations rather than comprehensive settlements, because then this way he can keep coming back with demands and then float additional tariff escalations in order to get them. So I think don't look for broad sweeping deals, but rather piecemeal things to keep him in the driver's seat.
Well, Charlie, it doesn't sound like the formula for any kind of all-clear moment that we can look forward to. Even if we settle around 10% for most trading partners, maybe that's what the market was kind of bracing for going into April 2nd. Remember, we had an 8% drop in the S&P into that, and we're basically right back at those levels. So, you're talking to all your companies. Do you think that we can navigate toward a level of tariffs that can be absorbed by the economy here?
Yeah, if we could get to 10%, but people are talking about 80% as if it would be acceptable. 80% on China is close to a trade war. It's close to an embargo, which is an actual act of war. There's no way that we're going to be surviving with an 80% tariff on China, and that would be highly inflationary. 10% is way above what we are at now. It would be inflationary. But 80%, I just don't think people should be talking about that as if that's a number that anybody's going to live with. So this is still a fraught situation. If you compare this to after Election Day, the market is only down maybe 3 or 4% with a real change in the macro environment. Again, long term, I'm bullish on the U.S., but the next couple of months are going to be very choppy.
Yeah, I guess so. With various other things going on, Doge, everything kind of testing the resilience of the U.S. economy here. Sam and Charlie, appreciate the time today. Thanks very much. Let's turn now to Lyft. The stock surging today with gains accelerating during the session, closing higher by nearly 30% after last night's earnings report and buyback news. Deirdre Bosa has more on this move. Hi, Dee.
Mike, it turns out that investors really appreciate a profitable, free cash flow positive Lyft that can return capital to investors. You mentioned that share buyback up to $750 million. That's up from $500 million previously, and that really got the activist investor Engine Capital to back off of its campaign. So investors certainly rewarding that today with a nearly 30% pop. Even with today's surge, though, I got to note that Lyft is underperforming its much larger rival Uber year to date and over the last 12 months. Of course, Lyft is pure rideshare, doesn't have any kind of delivery. In terms of the macro, which I know you guys were just talking about, CEO David Risher said today on Squawk Box that he is not seeing any indication of consumer softness. Rides remains durable and resilient. He also mentioned the robotaxi threat, which has just been such a big theme for both Uber and Lyft over the last year or so. And investors kind of now onto the narrative that Uber and Lyft, the ride-sharing guys, are going to be partners in this and not totally displaced. We'll see how that rolls out. Of course, we have some very big milestones coming up this year, including the arrival of Tesla onto the scene. Back to you.
Yeah, for sure. I mean, it definitely does not seem as if this is a pure winner-take-all category in terms of the mobility side. And it's still remarkable. You mentioned the performance of the stocks. I mean, Uber's still like 24 times the market cap or so, thereabouts, of Lyft, even though the ratio of revenue is not necessarily as skewed. So I do wonder if investors are saying, okay, you have the buyback coming in, whether it's going to get to huge scale or not. Lyft seems to have a cash flow kind of model that's working at the moment. So it is sort of interesting, considering at one point it was considered you could kind of dismiss Lyft as a competitor.
Right, and I think at one point it was almost like this existential question: will Lyft even be around? Could it be bought by someone else? But I think it's kind of established itself as the smaller rival, and as you said, that profitability piece has been so key to investors. I will say though that this is a $5 billion plus market cap company. It was once worth almost $25 billion, close to the IPO, more than 5 years ago now. So it has come down a lot, whereas Uber well above, obviously, its market cap when it went public around the same time.
For sure. Yeah, there's a lot of disruptive tech type companies where if you look at a 5-year plus chart, it isn't so cheery. Dee, thanks very much. Appreciate it. Happy Mother's Day. When we come back, UBS upgrading U.S. equities to attractive on April 11th, and the S&P 500 has rallied more than 7% since that day. Up next, the firm's head of U.S. equities tells us if he thinks the rally still has legs. And later, we'll talk about Tesla's push higher today as the stock notches its third winning week in a row. Overtime, back in 2 minutes.